Welcome back to Stocklabs, another market recap. September first week kicked off and it was pretty rough for markets. So yeah, everybody's back from Labor Day now. Hedge fund managers are back, from the Hamptons or wherever it is they go, Nantucket. And month started off with selling and didn't really, was never really interested in stopping, the major indices. We had the S&P was down 4%, IWM down 5.5%, Qs down almost 6%, and the Dow down 2.9%. So that was the outperformer. Bonds also up 3% for this week, at least by TLT measurement. And crude oil down 7% for the week. This is probably one of the worst weeks for crude since, I don't know, maybe the pandemic days. So tough week. If we look at leadership stocks, they were not really providing any cover. Nvidia down 14% for the week. Google down 7.5%. Facebook down 4%. Amazon 4%. Microsoft 3.75%. Apple 3.5%. Tesla was only down 1-ish%, but this is the only one of these down year to date. It's down 15% year to date. So, pretty rough week to kick off September, but kind of expected some of this. Expected the color of the tape to change once everyone was back from all the summer vacations and all of that stuff. So, if we look at breadth by industry, it's red across the board. Utilities only down 0.5%, so they were a little bit better than the rest of the market, but tech down 5%, industrial 6%, healthcare 5%, materials 6% and 6.6%. So, it wasn't really any good part of the market. This past week, we don't have any sectors that are up 5%. And we have a lot that are down over 5%. And actually, you see semiconductors leading as some of the worst subsectors in the market. That's generally not a good sign for the short-term outlook. Got, let's see, 75. We got 83 sectors that are down over 5%. So that's a decent washout, but not egregious. Usually when things really fall apart, you'll see over 100 sectors, 150 subsectors down over 5%. That really that is generally what we see when there's a big sort of capitulation. This to me seems more like a fairly steady selling, but a little bit sort of purposeful rather than just out of control. And so if we look at breadth by market cap, got 1 to 5 billion cap companies down 4.8%, slightly better than what the Russell did. 5 to 10 billion down 4.5%. It's also slightly better than what the Russell did. 10 to 50 billion down 3.4%. 50 to 100 billion down 3.8%. 100 billion cap plus down 3.3%. So actually for the things over 10 billion, 10 up to 100 billion plus, the breadth was slightly better than, say, the S&P or NASDAQ or whatever. So maybe that's a little bit encouraging, but, you're sort of just hoping at that point. if we look at intelligence for the coming week, we've got some Bitcoin thing, cannabis, ultra utilities. It's a new one. I don't think we've ever seen that on here before. Some other digital thing, gold miners, and mid caps. So not that exciting of a mix of tickers. And on the downside, we've got natty gas bearish, short silver bearish, so baby bullish silver, double gold short ETN, whatever this is bearish. So I guess bullish gold and silver. And semiconductors are bearish once again. So that's actually not encouraging at all to see this on here. Especially since they're down so much already the last week, even going back further than a week, but the last week was bad. And if we look at our oversold algorithm, we're not there yet. So we got 2.4 on the hybrid score. We need 2.27 ish to get oversold. Actually, we have one oversold sign this year, and it's at the end of May. So maybe we get another one, but we'll just have to wait and see on that. And yeah, so I mean, I mentioned coming into, as we were coming up on Labor Day, to sort of expect the market to maybe change course a little bit, how it was acting or whatever. After everyone was back from the holiday, we saw a big flush to open up September. Maybe that's a warning shot, or maybe it's just market playing with people and it's just going to go straight back up again. But I'm kind of not considering that as a base case that this is just going to V back up right away. I think you have at least another week of selling. We got the jobs number, which was okay, but it was a little bit weaker than expected. But then everybody also knows that even the numbers that are getting reported, they're getting revised down. So probably you can expect this number was actually much worse even than what it was on the headline. So we'll see. Rate cut is expected now by the market. Actually, market's trying to push Jerome around, get him to cut 50 basis points. I don't know if you're going to be able to do that, but that's more hoping by market participants. So yeah, that's all from me. We're into the sort of home stretch of the year, last 4 months ish. And yeah, talk to you next week. Bye.